Hi there, I'm RussHorn, and thank you for taking the time to visit my page today. Right now, I want to give you a trading system for free. I know a lot of traders struggle to find a really good trading system, so I've built this one just for you. This one is the FX Market Code. Now, please don't let the fact that it's free make you think it's not worth anything. It is. This is easily a $1,000 system. You can download this by clicking the long green button just below this video. And when you do that, you will download a zip file. Inside that file, you will find everything that you need. You'll find a manual. You'll find really cool custom indicators. You'll find templates, and you'll also find an EXE, an auto installer. This is going to install the entire system basically at the click of a button. In a minute, I'm going to show you how to get the FX Market Code up and running on your computer in a platform. What I would like you to do, though, is over the next few days, keep an eye out for more emails coming from me because there is going to be more cool freebies coming your way. Check out the rest of this page. There's some pretty cool stuff that you can win. Now, there's a couple of ways that you can win some of this. And the easiest way is to download the FX Market Code trading system, try it out, and simply leave a comment below. So do that. Try out the FX Market Code, leave a comment, and you could possibly win one of these really cool prizes. So click that download button. Let's get started. You'll download a zip file, and now I'm going to show you how to install the trading system. After we install the trading system, I'm going to show you how the system actually works. Now that we've downloaded the zip file, that's what this one is here, the FX Market Code zip file folder. I'm going to open that up, and what you'll find inside are 4 different files. You've got an indicators file folder. You've got a templates file folder. So indicators has got the different indicators. The templates has the template. You've got the FX Market Code PDF. Now this is the manual, FX Market Code manual. So we've got everything that you could possibly need as far as instructions goes as to how to trade the system. What are the setups, conservative, aggressive, and so on, long and short. This is a great system. The manual is very detailed. It'll show you everything you need to know. It's a PDF file. And then finally, we've got the FX Market Code EXE file. This is the auto installer. So let's go ahead right now and install this onto one of our platforms. Double click the auto installer, and I'm going to get this. Click yes. And now the installation wizard pops up. I don't need this other file folder. So I've got the installation wizard. Click next. If I have a MetaTrader chart open already, I'm going to get this warning. So close your MetaTrader charts and click OK. I accept the agreement. Next. Now, it's going to look for whatever MetaTrader terminals that you have on your computer. Now, I've got a couple. So I don't want to install it on all of them. So I'm going to deselect the ones that I don't want it on. I'm going to make sure I keep selected the ones that I do want it on. So give me just a minute to do that. I'm going to install it on my Invast platforms. Now that I've deselected every other platform, I've kept the Invast platform selected. It's going to install this on those platforms. So click next. And again, next. And finally, installations in progress. Click next. Run this MetaTrader application after install. So I will click finish. And it will automatically open the trading terminal. So this is my Invast trading terminal. Right now, it's got what I've called the basic black template. Now that I've opened it and I go to my templates file folder, you'll see that the FX Market Code template has been installed. Now, this is all I need. So I'm going to click this to apply it to my charts. And now I have a fully functional FX market code trading system. I can open Australian dollar, US dollar, and then from here I can apply the FX market code. And we have it applied to our chart. So open as many currency pairs as you like and apply it to as many of them as you want. We've got the FX market code up and running. Next, I am going to walk you through the rules of the FX market code trading system. So what we've got right here is the FX market code trading system. The indicators are on the platform and we're ready to go. We've got two main indicators here. Now the indicator on the price chart, the blue line with the green lines and red lines, this one's called Marco. This is the Marco indicator or the market code, the FX market code. This is the Marco indicator. And down below, we've got the Marco OSMA. Now, this is an oscillator of moving averages indicator. The settings have been tweaked and we have a very cool little trading system. So what I'm going to do is explain what it is we're looking at. Now the Marco indicator, this is the one that we're seeing on the price chart. The first thing you'll notice is this blue line that is running through the chart itself. This blue line is the 50-day moving average. A lot of traders, use this. Stock traders use this. Fund traders use this. A lot of different traders are using the 50-day moving average as their reference point as far as a trend. If the trend is up, price is above the 50-day. If the trend is down, price is below the 50-day. So when you have so many traders trading as though the trend is up, when price is above the 50-day, the market is going to start moving in that manner. We do have enough influence to actually make the trend up. If all these traders are trading as though the market is down or the trend is down when price is below the 50-day, it's going to start behaving as though the trend is down. And this is why we're going to use this one. The next thing you're going to notice is that the indicators themselves have these colored bars on them. When the trend is up, the Marco is going to start printing light green and dark green bars, or bright green and dark green as I describe in the manual. When the trend is down and the price is underneath the 50-day, the Marco is going to start printing bright red and dark red bars. What this indicator does for us, it tells us two different things. It tells us the direction of the trend, and then it tells us the pullbacks. Every trend will move in a zigzag fashion. And when you are looking at the market code, when you're looking at really the rawest, most efficient way to trade, you want to take advantage of those two things. What direction is the trend? And take advantage of the pullbacks during the trend. Once you know what those aspects are, the probabilities for your success climb astronomically. And that's what this Marco indicator does for us. We have the trend direction and we've got the pullbacks when it starts printing dark colored bars. We have a bullish Marco printing the green bars. We've got a bearish Marco printing the red bars. The pullbacks are the dark bars. Now, with the OSMA, this is the indicator that is below the price chart. We have a bullish and a bearish scenario with this as well. The OSMA, however, is not trend oriented as much as it is momentum oriented. When the market is moving upwards in an uptrend and we have strong momentum, it's going to start printing bright green bars. When the trend is in an uptrend, but is starting to lose its momentum, those bright green bars are going to start printing dark green. So we're going to have the OSMA printing dark green bars when the momentum is starting to fail. And the momentum can fail so much that it will start to print red bars. Now, this doesn't mean that the trend has changed. It just means that the momentum for that period is down. We're going to take advantage of this, and we're going to, from this, come up with conservative and aggressive trade signals. We know what direction we should be trading, which is what the Marco is doing for us, the Marco indicator on the chart. And we know where the momentum is, if it's bullish momentum or bearish momentum, and that is going to be present with the OSMA. With the OSMA indicator, again, this is going to show us momentum. Now, when the price is moving up, we've got some really nice bearish or nice bullish momentum. Then the momentum starts to fail. There is an opportunity there for the market to change direction. Now, this is going to become important when we're looking at the pullbacks. When we have a pullback, for example, in this area here, we have a pullback, the OSMA turns very bearish. So it starts to print dark green, and then it prints bright red. Bright red means that the momentum is really quite down. When momentum changes, though, when you have bright green bars turning to dark green bars, if the momentum is failing, this could mean that the market could change direction. And the trend is going to override these sections when the pullbacks happen during a trend. But when the momentum is down, like it is in this section here, we have a downward momentum. The upward momentum's failing. But when that downward momentum changes back into the trend direction, we have a potential again for that market to change direction. Market's pulling down. We've got the OSMA showing us the momentum is down. But when it goes from bright red to dark red, that downward momentum is starting to move back up. So we are going to be using that as an aggressive type of entry signal. We've got conservative and we've got aggressive. Let me show you both right now. When the market is up, when the trend is up, when the price is above the 50-day and it's starting to print green bars, we would like to see that the Marco, that the OSMA, the Marco OSMA is also up. The momentum is going to fail and we're going to have a pullback. Now, the bars on the Marco indicator on the chart aren't always going to change, but the OSMA is often going to change. The momentum from here to here in this area is down. The Marco is showing us this. So let's color this something that's different. Yellow. I'm going to make this line solid and a little bit thicker, just so that everybody can see it. Okay. So at this point, the market is starting to pull back. We've got the momentum failing. And then when the momentum kicks back in, the OSMA, the Marco OSMA, is going to also kick back in. It's going to show us that the momentum is starting to move back up again. We are aware of the trend direction. The trend is up. Price is above the 50. It's printing these green bars. So we're looking for the pullback, the dark green bars, and then a resumption of the trend. We're looking for the bright green bars. When we get a bright green bar and a bright green Marco indicator, we know that we can go long. We've got a buy signal at that point. We're looking for the pullback. We get it. We get it both with the dark green bars on the Marco indicator, and we get it with the dark green bars on the OSMA. They both resume. We get bright green bars. We get bright green bars. At that point, we can take a long trade. Now, this is a conservative long entry because the OSMA remained green throughout this whole period. We never did get any red OSMA in here. So it remained green. We have a conservative long entry signal. When we're looking at something a little more aggressive, what we're looking at is an area where the OSMA turns red in an uptrend. We've got this trend moving up, but the momentum, as far as the OSMA is concerned, has failed so much that it's actually bearish. It's not just failing momentum, it's become bearish momentum. And we get that in this area here. We've got that bearish momentum. price is moving back. We can see that clearly. The Marco starts to print the dark green bars on the price chart. But with that downward momentum, we get a failure there. What happens is the bright red bars start to print dark red. When you get the dark red or the dark green, we're looking at the initial momentum failing. So we've got this downward momentum starting to fail. It's starting to move back up again. When we combine that with the trend, we've got an upward moving trend. We're looking for downward momentum to soften or to start failing. And we're going to get that with the dark red bars. So when we have on the price chart the bright green bars and a dark red OSMA, this becomes an aggressive signal to go long. And we get that on this candle. Now, this line is so thick that it covers everything. I'm going to go back to the dotted line, guys, just because it's hiding too much stuff. And I hope you can see this. So at this point, we've got a bright green bar. We've got a dark red OSMA. This is an aggressive entry signal to go long. Now the market moves quite nicely at this point. So we have conservative when the OSMA does not change, when it doesn't change color from green to red. And we've got a more aggressive when the OSMA does change to the opposite color. So in an uptrend, OSMA is going to turn red and then turn to dark red. And that's going to show us that that downward momentum is failing and the upward momentum is going to start taking over again. So we have an aggressive entry at this point. Let's do this again. We're going to look at some short trade examples. A conservative short trade means the OSMA never changes color. It stays the same color throughout. We have a downtrend now because the price is underneath the 50-day and it's printing these red bars. It's printing the red bars on the indicator, the Marco indicator. Price is down. We've got the bright red bars. OSMA is looking down, and then we get the pullback. The pullback turns the Marco to a dark red bar. We get that pullback. And then what we're looking for is the resumption of the trend. We have the pullback as explained to us by the dark red bars, and then we're looking for the move forward. We're looking for the move back down, and that's going to be shown to us by the Marco printing a bright red bar. What I'm looking for at the same time is for the OSMA to start printing a bright red bar. In this area here, price is pulling back. We have the weakness in the OSMA also, and that's depicted by the dark red bars, just like on the Marco indicator on the price chart. So when the price does move back into the trend direction, we're looking for the OSMA indicator to also start printing bright red, downward, aggressive. The momentum is taken back over bars. We're looking for that signal. Now this is conservative because the OSMA stays red the entire time. So we have price moving down, printing the bright red bars throughout OSMA and the Marco indicator on the chart. We get the pullback. We have the pullback in the Marco indicator giving us the dark red bars. That shows us the pullback. And on the OSMA, when it starts showing dark red bars, it shows that the momentum is failing. And then we want the momentum to catch back, to get back, and we want the trend direction to resume. And that happens when we get the bright red bar on the Marco indicator and the bright red bar on the OSMA. Now, this is not going to always happen at the same time. We may have to wait one extra candle for either the OSMA's momentum to return or for the Marco to actually turn. So we're not always going to get this entry signal on the same candle. This is conservative. Now, we're going to take a look at something a little more aggressive, which would be here. We have, again, the trend is down, and that's price underneath the 50-day, and it's printing these red bars. Price is moving down. We've got the nice red, bright red bars printing. The OSMA, the momentum is down. It's red. The momentum starts to fail. And not only does it fail, the momentum as far as the OSMA is concerned, actually starts to become bullish. It's not failing downward. It's actually turned upward. The momentum turns upwards. We get that on this indicator, on this, we get that on this candle right here, where the OSMA has said that the momentum is no longer down. It's actually up. So with an aggressive trade type, what we're looking for is, again, the resumption of the trend, which is going to show us in the Marco here. The Marco is going to start printing a bright red bar. This candle gives us that bright red bar. So as far as the Marco is concerned, the trend is back down now. Now let's take a look at the OSMA. We get a small, these are small bars, so I hope you can see these, but we have a small green, dark colored bar. So the upward trend, as far as the OSMA is concerned, is starting to fail. It's not strong anymore. That upward momentum is starting to fail as far as Marco is concerned. So as far as the Marco OSMA is concerned. So on this one candle, we have an aggressive entry signal. We would enter at the close of this candle because we have the bright red bar. We've got the dark green bar. And then from there, the market will do its thing. It'll start to move back down. Again, we have a conservative short in here, and then we'll have an aggressive short in here. Conservative short, OSMA is red, pulls back, and then comes back to bright red, doesn't turn green. And then in this area here, we get OSMA turning from bright to dark green. So we have the aggressives and we have the conservatives. When we're placing a stop loss for these, it's an important aspect to cover. What I like to do is take a look at the last 3 closed bars. In a short trade, the market is going down. We're selling this one. What I want to do is take a look at, zoom in a little bit. I want to take a look at the last 3 closed bars. If this is the signal candle, this one closes. Once it closes, the OSMA is a dark green color. We've got the bright red. We know that everything's been verified. This only happens on the close though. During the formation of this candle, bounces up and down, we're going to have sometimes the Marco change from red to dark red. We're going to sometimes have the OSMA change from dark green to light green to red, back and forth. Once the candle closes and prints, then we know for sure that we have that signal. So what I want to do is count that signal, that candle. We've got the signal on this candle. It has to close. And then the prior 2 candles, 1, 2, 3. What I'm doing is taking a look at those 3 candles, and I'm going to pick the highest high out of those 3 candles. And my stop loss is going to go just above the highest high. Now, these 2 candles highs are the same. So the highest high will be, pick one. It'll be either one of these. So our stop loss will go just above. I don't want to put it on the high, but I want to give it a little bit of wiggle room. Let's take a look at something to the upside. Okay. We have here on this candle, the market resumes. The OSMA turns from bright red to dark red, giving us an aggressive entry signal on this candle here. So let's zoom into that. So between this candle as it closes, giving us the signal, and the 2 candles before it, 1, 2, 3, I want to take the lowest low. And that's where my stop loss will go. And it happens to be on the signal candle. The lows of the prior 2 candles aren't as low as the signal candle's low. So that is where my stop loss would go, just below the lowest low of the last 3 closed candle. Once we get that signal, this next candle is going to open. We're going to have this candle start as just a line. And as we're placing our stop loss and our take profit and so on, our entry, we'll enter the market, place our stop loss, place our take profit. This candle will be forming. This candle will have been closed. The other 2 behind it also closed. The lowest low becomes our entry. Our take profit is going to be what you're comfortable with, but generally speaking, I like to go 1-to-1. The 1-to-1 is the most commonly used one. It's the most easily hit. You don't have to think a whole lot about this one. When you have a stop loss that is, just measure that, 18 pips, I want my take profit to also be 18 pips. If I'm using a 1-to-1, it's through the reward to risk ratio. So at this point, the risk, 18 pips. The reward, also 18 pips. It's going to be the same as whatever the stop loss is. This is going to be the case for almost all of our trades. Now, if you're more comfortable with 2-to-1, where if our stop loss was 18 pips, our take profit would be twice that, 36 pips. Then you go right ahead and do that. If you like 3-to-1, 10-to-1, whatever the case is, you can change this to accommodate your trading style. But what I like to use for the most part is the 1-to-1. It is the profit target that is most easily hit. We don't have to wait very long. We're not in a trade for any great deal of time. And we're going to get our profit target hit more and more frequently. So the next thing I want to do is we've got an aggressive entry. We've got a conservative entry. I would like to show you a trend change type of entry. Now, this is a little bit more aggressive, and I don't recommend you do this right off the bat. I want you to get a feel for the system first. The trend change. We have an uptrend that turns to a downtrend. We have a downtrend that turns to an uptrend. So we have these areas where the market crosses the 50-day moving average. When you get a close below the 50-day from an uptrend, market's moving up, the trend is up, we get a close below the 50-day, this could be a signal to go short. This is quite aggressive, but these trades have the most potential to go the furthest. Now, there's a small requirement here. When you are looking for a short trade, the trend is up, turns down by closing below the 50-day. I want the OSMA to be bearish, and not just bearish as far as upward momentum failing. I want it to be red. I want the OSMA to be red when we have that close below the 50-day. I'm going to show you an example of when that changes and it's not the case. But right now, I just want to go through the different trend change scenarios. We'll go back to here, close, count back 1, 2, 3. Stop loss will go just above the highest high of the last 3 bars, would be this one. And then we look for a 1-to-1 profit target. Same thing with this one. Take a look at when the trend changes here. We have the price close above the 50-day and the OSMA is bright green. So we have the momentum is up. So it's not just that we're getting a close past it, but the momentum is up. If we take a look at this candle here, it actually closes below the 50-day. The next two do. We've got to close below the 50-day. We've got to close below the 50-day. We're not interested in reversing our position at this point because the OSMA is still green. We do not have the downward momentum. It's not the upward momentum failing. No, I want the downward momentum. I want the OSMA to be red if I'm looking for a short trade, and we don't get that. We get the pullback. Price closes just below, but the OSMA is still green. So I am not interested, again, in closing my position, reversing it. I'm going to hold on to this position. Enter on the close of that candle, count back 3, 1, 2, 3. The lowest low becomes that middle candle. Stop loss will go just below that lowest low, and we'll place a 1-to-1 profit target. It's another example of an uptrend. Price closes above, OSMA is green, 1, 2, 3. Price goes just below the lowest low, which is the third candle. And then from there to there, we're looking at a 1-to-1, and we nail that one pretty easily. Again, the low, OSMA is red. So we can take that short. 1, 2, 3, highest high becomes number 3. And then let's just make a quick look. Looks like 1-to-1 will be down here. So we would eventually be taken out in this area here. So we have the trend change signal. It's more aggressive. Again, these are nice, clean examples. Sometimes we're going to get chopped out. Here's an example of it not working out for us. We have a candle that closes below. The OSMA is red. So we do have the momentum to the downside. The momentum is down, and it is not going to win. We are going to lose this particular trade. And that is going to be what happens from time to time. We are going to lose from time to time. We're taking a look at this market. This is one you want to stay away from. The trend is changing a lot. We have up, down, up, down, up, down, up, down. I don't want to trade a market that looks like this. I want to stay away from it. Taking a trade in this environment is not a safe thing. What I want to do is look at the market. What has the market been doing? And if I don't like what it's been doing previously, what makes me think that the trade I'm going to take right now is going to change the way the market has been behaving? It won't. It'll just keep doing what it does until it changes, until it shows me it changes. I'm not interested in taking a trade. So if the market is looking very sideways, very choppy, it is going to keep doing this, whether I take a trade or not, until it proves to me otherwise. So once I start getting lots of bars, once I start getting the price moving away from the 50-day, once that trend really does change, I'm not interested in taking a trade. And you're going to find that you're going to get chopped out. Now, this doesn't matter if it's this system or any system. You're going to get these periods where the market is very choppy. And this 50-day is going to really show us nice and clear. See how sideways this 50-day is moving. There's very little up or downward movement to the 50-day. It's moving right through the middle of the price. It's a very good sign that we're going to experience some chop in the market. Next, the Marco is printing these little red, little green bars, and it just switches from back and forth. There is no trend at this point. And we don't trade because there's no solid trend. We've got the beginnings of trends. The market wants to start an uptrend, it wants to start a downtrend. Again, up, down, down. It wants to start going, but it can't take off. So we leave these conditions alone until it starts to print nice and smooth. And then at that point, once we realize that the trend has taken off, we're going to start looking for signals until it starts getting choppy again, then we leave it alone. Okay, well, I think that is it for this very quick webinar. Now, you have the manual, and it covers all of this in the manual. It covers your stop loss, covers your take profit, covers the conservative long, conservative short, covers the aggressive long, the aggressive short, and it covers the trend change trade as well. So refer to the manual, come back here, watch this video again if you want to, but everything's in the manual. You will have this trading system hopefully for a very long time. This is a nice little system, and it does function. It does work well. It identifies the trend. It identifies the pullback. It will give you the trade in the trend direction. And that, in my opinion, is the market code, the Forex Market Code. Identify the trend, know when the pullbacks happen, know when the trend actually changes direction, and take advantage of all of that. And the Forex Market Code does that. It's a nice system for this. Now, again, on this page, you're going to find down below that there's prizes that you can win. You can win some different prizes that are really kind of neat. Now, there's a few ways to do that, a few ways to win one of these. One of the best ways to do this is to download this system, the FX Market Code system, try it out, and see what you think, and then leave a comment. Leave a comment about the Forex Market Code system, and some of the better comments are going to win one of these really neat prizes. Thanks for watching, guys. I hope you get a lot out of this system, and I hope this system works for you. It was built to make you some money. I know traders struggle, and I know there's so many systems out there that this one being for free is not a cheap system. This system, as you've seen, does have its merits. It works, and it works really well. Now, I guess I should mention, even before we leave here, I want to show you the filter mechanism. It's something that's in the manual, but I want to show you an example of that, how the OSMA filters some of these trades. We're looking for the trend. The trend is up. Price pulls back, gives us the dark colored Marco indicators. And then if we're only using the Marco, it suggests that the trend is back up when you get the green bar. At this point, you get the green bar on the Marco, but the OSMA is still bearish. It doesn't give us that green, the bright green that we're looking for. It doesn't happen on this candle, doesn't happen on the next one. It just remains bearish. It is telling us that the momentum is down. When we don't have the two indicators agreeing this way, whether it's a conservative signal or an aggressive signal, whether the OSMA is green turning to a bright green, or it's a bright red turning to a dark red, showing us that the momentum is starting to resume. If we don't get that agreement, we don't take the trades. We don't want to be in that because the momentum's not there. Even though the trend is there, the momentum isn't. We've got that to the upside here. And then again, to the downside in here, like we have this. If we had taken this long trade, it would have been a losing trade. We would not have made we wouldn't even have made a pip on this one. Like the market just never moved into profit. This would have been the entry signal, the entry candle, and we just never, ever got higher than that. So this one would have lost everything on that trade. Now, this is the same with this. We have a potential short on this one here. The Marco turns red, starts bright red, turns dark red. The trend resumes if we're looking only at the Marco indicator, but the momentum hasn't resumed. The momentum is still failing. So this is a trade signal we wouldn't take because we don't have either the bright red OSMA indicator or the dark green. We don't get that. And the same happens in this section right in here. We have the pullback, the momentum, or the small pullbacks happening within the trend. And then, of course, we're looking for the trend to resume. We get that with these bars. We start printing the dark red, the bright red bars after the dark red, prints the bright red. The Marco is telling us that it believes that the trend is going to resume. The OSMA is filtering that out for us. It is still printing bright green bars. It has turned green, suggesting that the momentum now is upwards. What we'd be looking for is a dark green bar, and we don't get that in this section. What happens is the Marco prints these dark red bars, telling us that the trend is still experiencing that pullback. And when we do get a dark green bar, suggesting that there is some failure in the momentum, we don't have any of the bright red ones. So again, we don't get that confluence. We don't have the two different indicators working together. Finally, we get that in this area in here. We start getting the momentum down, the red bars in the Marco, and then the market drops. So we see that we have some nice filtering mechanisms here. We have that confluence. We want to see that everything is working together. The trades are going to start working out. And the reason I bring this up is I just wanted to point out that this isn't just a fly-by-night trading system. We have a couple of really neat elements. They're working together really well. And if you trade this, you follow the rules. Again, they're in the manual. Review this video again. You're going to do very well. Again, Cool prizes to be won. Try this system, see what you think, and then leave a comment, and some of the best comments are going to win. Thanks very much, guys. I am RussHorn, and I look forward to talking to you again very, very soon.